Welcome back to the Money Under the Mattress podcast. My name is Mitchell and my co-host is Jake. And today we are joined by Sinstockpapi. We met Sinstockpapi through Twitter, once we started talking, we realized we have quite a bit in common. He is a 24-year-old that is fairly new to the investing world and has a concentrated portfolio of Sin stocks. We're excited to sit down with him today and discuss his strategy and learn more about him. So thanks for coming on today, Sinstockpapi.
Thanks for having me, boys.
Hey, it's great to sit down and talk to you. I mean, we've been following you for a little bit now on Twitter, at least I have, and I've always been interested in the tobacco industry, and I've talked to a couple of guys, and Greenwald Capital was the one that said that you're the one to talk to, and so here we are.
Nice guy. He's too kind to me.
I'm sitting talking to him tonight, actually, after this podcast. So
very interesting. He's got a really cool story.
Okay, so I'll be interested. I think we have him on the podcast next week, actually. So it should be interesting. I guess we'll go into the first question there. The first question is, how did you come up with your name for Twitter?
Yeah, so famous Canadian, everyone knows him, Drake, probably the most famous Canadian globally. I might get shit for saying that. But his Instagram handle was Champagne Poppy. So I thought Sinstockpapi was a pretty clever iteration on that name. So I guess what I'm interested in is great businesses. And for the most part, or at least like they fall into three buckets for me. So what I call mission critical infrastructure. So that could be software, could be physical infrastructure like cable, like airports. Maybe they sell airplane parts like TransDigm. Then I have another bucket that I call essential goods that society deems dirty. So that might be stuff like industrial plastics, maybe some oil stuff. And then the last one is limbic capitalism. So that's kind of where I think tobacco and some sin stocks fall. And I think that essentially limbic capitalism focuses on businesses that capitalize on persistent habit formation. And I think we can all attest to how hard it can be to kick bad habits, whether it be alcohol, tobacco, like social media or whatever. And for me, generally, I've been addicted to just nicotine in general. I started dipping when I was in grade 10, and that started in the hockey locker room, baseball diamonds, just like any, I guess, normal kid who plays sports. And I think that the reason why I like sin stocks, or I've been drawn to them, is sin is lindy, which means that it's been around for 5,000 years. So the probability that it survives another 5,000 years is pretty high, because as the world has changed around us, and it's changed a lot in the past 5,000 years, the one constant that will never change will be human behavior. And that's where I think that sin exploitation, that limbic capitalism exploitation, that opportunity exists. And that's what I'm looking to exploit as an investor.
Okay.
Hence the name. Yeah.
That makes sense. So how did you initially get into investing?
Yeah, so it was a total accident. My whole life, I had this one uncle who's like really rich, and he's a dentist. And I was like, fuck, man, I'm going to be a dentist. I'm going to be loaded like this guy. And I went to a school where we had mandatory extracurricular like clubs. And it was a complete accident. I missed the club fair in grade 9 because I had a hockey practice. And they just stuck me and my buddy Colin in the business club. And we ran a stock market simulator. So we basically won the stock market simulator in our first year by putting 50% of our portfolio into Apple because we thought the products were cool. And we put the other 50% in Lululemon because we thought like the pants nice. So we're like, fuck it, let's invest in this thing. So we were lucky. Those stocks ripped. We won and we had early success. So I was hooked. I was like, fuck, I could do this for a living. It's like grade 9. I had no idea what like the actual investing world like entailed. So I went to university at Queen's and then parlayed that into 2 buy-side internships while I was there during the summers. So one was a spinoff of Burgundy Asset Management run by their former head of research named John Ewing. And the other one was like a fund that was modeled after Giverny, which is Francois Rochot's fund. It wasn't his fund or a spinoff, but it was modeled after his fund. So it was like very garpy, a lot of similar names. And I found that more appealing to me than what the previous fund did, which was more cheap assets, hidden asset values, more based on comps. This garpy fund was more focused on the business drivers, the qualitative factors, more focused on like how the company's creating value. And then just through my reading, I read a lot of books on investing while I was there. I think the ones that resonated with me the most were Zero to One by Peter Thiel, and the general and a, like outsider, like The Outsiders, Poor Charlie's Almanac. But I think Zero to One had a really good key concept in there, and that was on competition is the opposite of capitalism. So essentially, you want to be investing in secrets, things that like where you're contrarian and right. That's where the big payoffs are. So I think that's like kind of like my foundation. I'm into the garpy, growthier stuff, high quality businesses, but also I want to try and find an opportunity where the facts and the narrative don't match, if that makes sense.
No, that totally makes sense. And same with, I mean, with many of the sin stocks, I mean, just speaking tobacco, like the competitive advantage that they have over one another is fairly high, based on the
Mm-hmm.
fact that if I'm smoking Camels or if I was smoking John Players, then most of the time I'm not going to switch, even if it was $1 difference or $2 difference from a different pack. It's all
Yeah,
it's all based on taste.
Mm-hmm.
Um,
You were gonna say, Jake?
Yeah, I think it's a very sticky product. Like if
Mm-hmm.
you ask people, even if you ask like your friends' parents that still smoke, they'll say they've smoked the same brand of like cigarettes for years on
Yeah.
years.
Yeah, I don't know if you guys have Belmonts out there in New Brunswick, but like that was my go-to. I smoked cigarettes from my first year university because this guy from Montreal, I lived with him, and those Quebecers, they get you hooked, man. But like he got me on the cigs, and I quit by third year. But I never bought any other type of cigarette except for Belmonts, and that was my brand. And I know people who are like very specific. I have another friend who only smokes De Maurier. And I don't know, I tried it one time, I just couldn't do it. I think it's like psychological.
Interesting. I mean, I've
Mhm.
never been big into cigarettes or anything like that, but I do know that they're highly addictive, and that
Yeah.
once you're on one of them, then you're not going to switch up on them. And so, yeah, it's a super interesting industry, and it's always been kind of like been pushed back by massive funds. Like most funds aren't really interested in. I mean, I guess nowadays, like ESG funds aren't interested in
Yeah.
touching tobacco stocks, and so
Mhm.
for investor like yourself, you must be just eating that up at 10 times earnings,
Yeah, exactly, man.
right?
Low competition in this arena
Hmm.
because the professionals can't buy it. You've had technical dynamics which have been exacerbated by ESG, right? You're having a lot of funds who are forced sellers because they have to essentially meet new mandate requirements. And then other funds who want to buy this stuff can't buy it. So I've talked with people who are currently in the fund industry. I after graduation, I didn't end up pursuing any buy side roles, but or work in finance in the like in the traditional sense, sell side or buy side. But my friends who are working on the buy side will be like, I want to invest in this personally. And I'm like, why can't you pitch this to your manager? And they're like, oh, our clients would never buy this. They would have a revolt, basically.
I have a question about like the tobacco industry. Like I don't know much about it,
Mm-hmm.
or the cannabis industry as well. But are the tobacco companies planning to maybe start doing some things in the cannabis industry, or have they
Uh,
already?
I believe so. I know Altria has talked about THC infused products. British American Tobacco recently invested in, I want to say, one of the Canadian ones. I forget which
Oh,
one it was.
Organigram. I seen that actually.
Yeah,
Organigram. Yeah.
yeah. And then the other companies like Turning Point Brands is one of my bigger holdings that is kind of like it's kind of like an ancillary play to the cannabis industry. So I don't know who's going to be the winner in cannabis, but I know every time you roll a joint, you're going to use a zigzag or you're going to use some other rolling paper. So that was interesting to me. And it was a brand that I was familiar with. Like all of my stoner buddies in grade 10 were wearing those zigzag hoodies. So I know the brand has some loyal consumers, I guess.
So there's even multiple moats through this too. I didn't even I mean, obviously brand moat is with cigarettes too, but with rolling papers, if people wearing like, 'cause I printed off a thing about Turning Point, and if they're wearing zigzag sweaters to school, then yeah, that's
Yeah.
total. I mean, I'm not wearing Exxon Mobil on my t-shirts, but maybe you guys are. But no, that's like super interesting.
No, it is. It's maybe it's a Canada thing or maybe it's an Ontario thing. I've heard from other people raw is a bigger just today raw is probably stronger maybe in some parts of the US. I know in Canada also and probably in the US like backwoods is popular for if you're rolling blunts, not joints. And then Swisher Sweet is also very popular in the blunt category. And then also some of Swedish Match's cigars portfolio, primarily White Owl and I think Game, are also popular for the blunt rolling category.
Yeah, I know around here, like I've heard of raw. Have you heard of raw, Jake?
No, I haven't.
No, you haven't heard of raw. I've heard of raw, and I've seen a couple people like wearing it, similar to the like what people wear up in Ontario, zigzag.
Yeah.
But you own Swedish Match, is that correct, in your portfolio?
It's a small position, yeah.
Okay.
And I'm going to be looking to increase it. It's an interesting company for sure.
And are they strictly just cigars based, or are they also blunt based too, like cannabis?
No, so essentially so cigars is their secondary business. And I want to say it's 29% of sales and 28% of operating profits. But the lion's share of the business is what are called oral or smoke-free. And that's Zim, which is a nicotine pouch, which is like a dip alternative. And then they also own Redman, which is a chewing tobacco product. And then I forget what MST product they own, but they own a smaller MST product as well, so a smaller dip product.
Okay.
But the general thesis there is that it's a capital light compounder that sells addictive, like basically addictive habitual use products. I think they'll have brand loyalty just like traditional tobacco products. There's a long runway for growth. And in general, it's very similar to, if you've ever read Poor Charlie's Almanac, he spells out their Coca-Cola thesis. And I think it's a better adaptation of that Coca-Cola thesis because the alternatives here kill you or they have glaring user experience problems. So at the end of the day, like you're not killing your most profitable consumers. And then at the same time, it's also a win-win for the distributors because the distributors are taking 30% margin here. So they're making a 150 per tin based on the average sales price of $4.95, $5, whereas they're making less on cigarettes and on traditional MST. So it's kind of a win-win on both sides, and they've got pricing power.
Okay, interesting. Do you know what the taxes are? Like I know in Canada, cigarettes are taxed crazily. Is it similar in the States too, or is Canada taxing them more?
No, Canada's taxing way more. So, for example, I didn't realize how crazy it was until like I really thought about it. So when I was 17, there's this guy that played on my hockey team. His name was Anton. His dad worked in construction, was from Croatia, came over because of like communism. He would smoke 2 packs a day. So in Canada, at that time, that's in between $40 to $45 a day on cigarettes. Comparatively, 2 packs of cigarettes in the States is probably going to run you on average somewhere between $10 to $12. So a pack of cigarettes is on average closer to $5 to $6 than in Canada where it's 21 to 23. So they've got 4x pricing. This guy wasn't rich by any stretch of the imagination. He worked in construction. He was a contractor, and he was spending $40 a day on cigarettes.
No, I mean, it just shows you shows you the pricing power that they have, right? I guess. But holy.
Do you see? Oh, sorry.
No, go ahead.
Do you see the government maybe doing something with the tobacco industry?
I think in traditional cigarettes, there's probably a chance of excise taxes that are going up, and same thing with traditional dip. I think they have pricing power though, so they've historically been able to offset those excise taxes. But generally, as it applies to Swedish Match or even Turning Point brands, I think the oral category is less susceptible to taxation or regulation, because if you look at the CDC survey for 2020 and you look at the usage incidence of smokeless, which is both dip and nicotine pouches, the incidence was only 2.3%. Whereas, for example, something like vaping, where there was a hard crackdown, ban of flavors, everything like that, it was 25% at peak. So 1 in 4 kids were using vapes, whereas 1 in 40 is using smokeless. So it's a pretty big difference, right? A factor of 10 times. So I think that it's less likely that pouches or MST get regulated and get excise taxes than I think cigarettes. But even at the cigarette level, they've been dealing with this. And just to talk about the inelasticity of demand, just going back to that last example, that guy's dad, Bronco, he's spending $40 to $45 a day on cigarettes, whereas the US consumer is spending, if they're buying a pack a day, somewhere like $6.
To go on to vaping. So, I mean, I just graduated high school a couple of years ago, and I could probably tell you at least 65 to 70% of my high school vaped.
Higher than that, Mitch, higher than that. Come on. 95,
bro.
95 at least.
I'd say like 90, 95. I mean, you go to a party and I guess, go to a party. I'd say there's 99.5. There's one person that probably doesn't.
Yeah.
But I was in the category where it was all flavored still. And do you think that the crackdown on getting rid of the flavored vapes, do you think kids are still going to vape, or do you think that they're going to move to an alternative, or are they just going to completely stop?
Yeah, so I think that so I had the same experience when I was at university. Even the girls who went to schools like at the Catholic private schools with the nuns who were like prudes, like by third year university, they had named their jewels Julia and Juliet. They were having a rowdy time, you know what I mean? But I agree with you. Great category. And I don't think that so we've seen two things happen. So I've heard from some people that the people who particularly liked flavors have migrated to nicotine pouches, like Zyn, where there are still flavors available. Temporarily, some people have moved into disposables, like those Go Puffs, because there's a loophole there that basically means that they can still produce flavors, but I think that loophole will be closed. And then third, you have the people who have still stayed in the vaping category. And I think that even the people who leave, for example, like I left temporarily, like they'll come back, because there is some sort of element of vaping or even cigarettes that it's relaxing. Like it's a deep breathing kind of thing. Like you're inhaling, you're exhaling. It kind of calms you down, like de-stresses you. So I think that there's definitely going to be multi-category use. I think that it's interesting. So I still vape and I use mint flavored now. Obviously I would prefer mango, but I still, like I have no quarrel with the polar mint, if that makes sense.
Is that through Juul? Is it?
Vipe. So I have to support my
okay.
British American Tobacco boys.
Okay.
Yeah.
I'm unfamiliar with the nicotine pouches. Are they anything different than just like the dip pouches that you'd get here? Or I guess over in
So
Quebec?
picture the pouches, but no tobacco,
Okay.
just nicotine, no mess, no spitter necessary, no dip spit, no staining of your teeth, no need to worry about oral cancer. Your girlfriend won't make you brush your teeth before you try to kiss her. It's just way easier.
So is
And you
it
can do it
similar
at
to like
work.
a is it similar to like a Nicorette gum, but in a pouch form?
Yeah, but better, I would assume, because it's growing faster than I would say Nicorette. So I use the gums right now, and I would say that it's not as satisfying as probably a pouch would be. For example, like I used snus, which
Mhm.
I would actually import from Sweden before I switched to the gum. And I would do snus again, but the thing was, it was a hassle to import. And then the other thing was, it stained my teeth. So my teeth are the only thing on me that I like. You know what I mean?
Mhm.
So I wanted to keep those pearly white. So I went to the gums. But I think if they sold Zyn here, I would probably switch.
Interesting.
Yeah,
What are your
I've never heard of those, but yeah, you go there, Jake.
yeah yeah? So what are some of your favorite sources for generating ideas?
Personally, I look at my like so I look at where I spend my money. I think about areas or particularly places or categories where I'd spend more money than I would otherwise. So I think obviously nicotine is one of those because I have an addiction to nicotine. The
Mhm.
other category, I know, so Phoenix Value on Twitter, Greg, he's a big investor in Rick, which is a collection of strip clubs. And when he talked about it, also Yaron Neymark talks about it a lot. I think his Twitter is One Main Capital.
Okay, yeah.
Um, he talked a lot about Rick, which is a strip club roll-up. And I'm thinking in my head, the only two places where they actively try and get you boozed and they don't cut you off, which leads to suboptimal decision making, is the strip club and the casino. And those are
Mhm.
places where, like, again, limbic capitalism, there's all these stimulants. There's like naked girls walking around, or there's slot machines, you know what I mean? And you're absolutely boozed and you're like, fuck it, I'll do something. Like, you know what I mean? You would make a suboptimal decision.
Mhm.
So I think some of those categories are interesting. But then, yeah, just stuff I use. I think you were talking about it earlier, like Facebook or Netflix. You have competence in those areas. I think I generally try and stay within my circle of competence. And then, other than that, I'd say FinTwit is a great source for idea generation.
Yeah, I've started using FinTwit a lot more now within the last couple of months, and it's unreal for generating ideas, I find.
Yeah. The thing that it's bad with, though, is you have all these ideas, but then how do you sort them? So a kind of trick that I learned at the other fund, so the last fund that I worked at, out of those two, was to build a ranking algorithm. So they built their ranking algorithm based on value and quality, and their determinant of value was price to earnings, and then their determinant of quality was return on equity.
Mhm.
So I kind of adapted that. So I use value, quality, and growth. So for value, I'm ranking the list based on enterprise value to gross profits, enterprise value to EBIT, enterprise value to unlevered free cash flow, market cap to free cash flow. So that's my value bucket. Then
Mhm.
my quality bucket is gross profit over tangible assets, which Malbusan has shown or has demonstrated is probably the most persistent quality metric. And then the other one is cash return on invested capital. And then the other one is just gross profit growth and then cash flow per share growth. So I kind of rank them all individually. And then I do a combined rank on those three lists. And based on those combined scores, whatever shows up at the top of the list is what I work on. And ironically, what that turned out to be, or poetically maybe, was tobacco. All these tobacco names are at the top. So it worked out pretty well, I'd say. So that's my cop out if this thing goes south, was the model also said it was right. The quantitative, non-biased.
Yeah. That's interesting though. I like that. I like kind of having filters there for trying to get through into it.
Yeah, because the thing is, you never know what to spend your time on. And the thing is, most people, they try and filter through their ideas based on what can I make money on today, or they try and use some sort of bias and they're like, oh, what will go up soon? So I look smart to my LPs, or I look, or like I make some money. And I think that this way works better, personally. At least.
Oh, sorry, keep going there.
No, go ahead.
I find that like as soon as I look at something, like if someone suggests something, if I don't know anything about it and it's not even close to like another company I own, like in the same industry, I usually just, discard it unless like there's some statistical measure that really jumps out at me. Or like sometimes you just like it really interests you. Like the first thing you read about it, it'll really interest you and then it'll lead me down this road. But usually I can tell within like a few minutes if I like it or not. Like, it's yeah.
Honestly, man, I agree with you. And the thing is that, so in March of 2020, the top 2 things in this ranking algorithm, or the top 3 things, number 1 was restoration hardware. Number 2 was Angie, and number 3 I think was Q-Rate. So I should have just all like, you know what I mean? The model, it turned out well.
Yeah,
so,
it really did.
So definitely like after that, and another one, I think number 4 was, I forget what their name is, but they're in the UK and they sell premium tonic water. So like it's a tonic water that you pair with gin, and I had it in that, and it came out number 4, and it tripled or quadrupled from March of 2020. So I should have just, I ignored it because I built it like 3 days earlier. So like, there's no fucking way this thing is gonna be, you know what I mean? But just kind of tracking and back testing, it worked out pretty well.
Mitch and I are pretty disappointed that we didn't pick up when Berkshire bought restoration hardware.
Yeah.
That would have been, I think, at 10x or 15x since they've bought it.
No, I think or I thought that was a 6, no?
Was it 6? Maybe I'm just overestimating it. But
yeah, I think it's a 6 or 7. I think it's a 6 or a 7. I think their average cost is probably around 150.
Yeah, it was pretty impressive. And I'm guessing it was probably Ted or Todd that did it, and it wasn't actually Buffett.
No, that's correct.
But I think it's more important to look at those smaller holdings than like the big, like Verizon. Those smaller holdings, I think, are the ones that I'm more interested in, particularly. I mean, I looked at Verizon quickly, but I didn't think it was like extreme.
Do you ever look at 13Fs to generate ideas?
Yeah, sorry. That's actually another way that I generate ideas. So I think looking at those smaller holdings is great. Like I have great respect for Ted Westler.
Yeah.
I think he's super smart. He's like, his story is incredible. And I don't know if you've read his old letters from Peninsula Capital.
No, I haven't.
No, I have not. No.
Those are
incredible. Is there a link to that? Is there a link to that?
I have them. I'll send them to you.
Awesome.
Oh, awesome.
Yeah. He's got like a really similar way of thinking, and he also is a huge fan of the Malone complex, and I'm like a Malone stan, a big fan of Malone. I'd say more so than Buffett. But yeah, I look at him. I look at Giverny. I think they're really smart. Who else? I don't really think they're like, Turtle Creek. I really like Turtle Creek because they're very unique in how they invest. I'd say more so than other people. They don't really like look for Modi businesses. They are essentially more so looking at companies that can build value through acquisitions. And they're really good at it. There's some questions about their early returns because they used to be a private equity firm and they kind of mixed results, which some people say is not kosher. But they've still done 22% a year, close to that since inception, which was 1997 or 1998.
Okay.
And the last, I think, 15 years is close to 12%, which is still better than the market.
Yeah.
So I've stolen 2 companies from them because I have a buddy who works there. So I literally just shoot him a text. I'm like, oh, I saw you guys added this in size. And then he just goes, yeah, buy this thing. It's money. I'm like, okay, if you say so.
Where's Turtle Creek out of? Is it Canadian?
Yeah, they're out of Toronto.
Okay. I've never heard of them. No, I wrote them down. So that'd be interesting.
Mm-hmm.
I think I remember reading something about Ted Westler where they said that he was really into special situations. Like he was pretty good at it.
Yeah. I don't know particularly too much of what he owned at Peninsula, but I think he was big. So he worked in 2 industries before. So he worked at, I forget what the company's name is, but they made catalysts for like fracking. I don't remember the name specifically, but that was a big holding in his fund, and he bought it super cheap at a time of mispricing. And then he also was big into DaVita, which they now Berkshire owns over 30% of.
That's right.
And that was also his prior work experience through I guess like he worked in some way or some shape or form on dialysis clinics. And then he owned a lot of other interesting things, like Cincinnati Bell was interesting. He owned like some of the Malone complex. But I'm not super familiar with, I'd say, like a lot of his other stuff. I'm not that well versed in what he does.
Have you read his letter? I think it was just like a 1 or 2 page letter that he talks about his IRA account. So like when Peter Thiel came out, or like when I think it was, I forget the exact company that came out with Peter Thiel's IRA account, how it went up so many dollars.
It went to like 5, was it like 5 billion or
4 or 5
something
billion
like
or something like that? They
Yeah.
also brought out Ted Westler's, and they said that $1 like initial investment in his IRA account turned into 9,000.
Yeah, that's crazy what he did. Like, that's crazy. One other guy. So I don't know if you guys know who Seymour Schulich is. I think he was one of the founders of the original Franco Nevada. I could be wrong, but he's a Canadian guy. The York, like the University of, or York University, named their business school after him because I think he donated a bunch of money. But his RRSP at one point was like over 100 million, which is nuts.
Yeah.
What was his name? Did you say?
Seymour Schulich.
Schulich.
So so the Schulich School of Business is named after him.
Huh.
One interesting thing that you'll like about Turtle Creek, Mitch and Jake, is that they own a lot of home capital, which is the same, like Stephen Smith is also at Equitable Bank.
At Equitable, okay. Sweet. I'll look more into them.
Mm-hmm.
Yeah, I mean, me and Jake, we look at 13Fs actually pretty religiously, to be honest. Hey, Jake?
Mm-hmm.
Yeah, but we don't get all of our ideas from that. I find that there's only a handful of guys that we look at now. Like we've kind of screened out a lot of the 13F.
Yeah.
Like if you look at Dataroma, for example, majority of those people we've screened out because either they don't invest the way that we kind of invest, where they're more focused and they're more diversified.
Yeah.
Or we just don't agree with like how their
investment philosophy.
Like that's basically the reason why we don't look at all the 13Fs, but we have had some pretty good
the guy that I like a lot.
From it.
The guy I like a lot is Norbert Liu. I'm not sure if you ever watched the Joel Greenblatt videos or like on Value Investors Club, Charlie 479.
Mm-hmm.
Yeah, so he's Norbert Liu, and he own 5 stocks, I think, Jake? 3 US and then 2 overseas.
Yeah.
And
his 3 in the sorry.
There you go.
I think his 3 in the US are Winnebago, Ally Financial, and Berkshire.
Very cool.
And he was the one that wrote up on NVR, if you're like the home builder, if you're
true.
Charlie 479.
Yeah, that was a sick write-up. Was that the one from 2001?
Yeah. He's that guy.
Oh, that's awesome.
And so he's on that Roma, and so he owns 3 business. He just sold NVR lately. Like he buys and sells it. But no, he's one guy that as soon as it pops up on our screens that we're both hopping on the phone, making sure that we understand what whatever company he's invested in.
Yeah.
I think he took his mom's like retirement account, like from like 50,000 to like a few million in like a few years. Because I remember
That's crazy.
reading there was an article by, who did it? Was it Santangelo? Is it called?
Santial Review
Santiago Review, and they talked about it and how like his mom trusted him with her like life savings, and he like
during
made her a
university.
millionaire,
Made her a millionaire
like
within
30 or
university.
40% a year return.
That's unreal.
Yeah,
That's a dream, bro.
exactly. Yeah. That's why I keep reading these books and 10Ks.
Honestly, normal people. So like, I come from a family where both my parents are engineers, and then most of the other, I guess, people in the family are professionals, but they don't understand the power of compound interest, and they don't
Why?
understand. It's crazy. Like a lot of these people would be a lot better off if they actually understood and they knew what they were doing, or even if they just index as opposed to buying these mutual funds or fund of funds that are
No,
that are
exactly.
charging them 400 or 300 bips a year.
No, I mean, have you ever read Beat the Bank? It's by
No,
a
I
Canadian
haven't.
guy. What's the author's name, Jake?
Larry Bates.
Larry Bates, and it's a pretty good book, and it's talking about how mutual funds are ripping you off. It's a really good
Yeah.
book, and he goes through like case studies of if you just invested in like a Vanguard ETF,
Hmm.
diversified ETF, or a couple of them compared to if you were invested in like a big six bank
Hmm.
mutual fund, like it's night and day pretty well.
Over a
Yeah.
lifetime, like how much you actually lose percentage wise, just by a few
Yeah.
percentage points. Like it's
Yeah,
amazing.
over like 20-30 year time horizon, it's like 50-60% that you lost.
Yeah.
But
You want to hear something pretty cool?
mm,
So this just made me think about it because you were talking about banks and stuff like that. But there's a Canadian bank that's actually outperformed Berkshire over the past 50 years.
no way. Which one is this?
RBC.
Has it actually?
Yeah,
No way. I did not know that.
it's crazy. I think if you follow at Notchkari, so at NACHKARI, he posted a visual of this a while back. It was pretty eye opening to me. It was pretty interesting. I was like, how?
Well,
No, you don't hear about that ever. But
I know they've
No.
had some good returns over the last like 5 or 10 years, but I never knew the history of how good they actually did.
Yeah, it's crazy.
do you want to go in to talk about your biggest holding, BTI?
Yeah. So essentially, same thesis. Uh, it's a capital light business. It sells basically addictive habitual use products. It's got brand loyalty. And then through their RRP portfolio, so reduced risk products, or some people call them new gen, they have a long runway for growth there. And I think that the end game is pretty obvious. One day, this will be a reduced risk product company. It won't kill as many people. So at the end of the day, it's a win-win. The customers live longer, so you get to milk them. On average, the average cigarette smoker lives 10 years shorter than the non-cigarette smoker. So you get them for 10 more years. You get to milk them for 10 years. And they essentially can flex their scale. So they throw off a lot of cash. They're highly profitable, and they can essentially subsidize these new gen products versus maybe an upstart like Swedish Match. So I think that it's just a good business, and they've got insane pricing power. They raised prices somewhere like 5 to 7% this past during 2020. So that's like that's essentially the worst recession in 300 years, and they were able to do that. You know what I mean?
Yeah.
So I just think it's a no-brainer trading where it is, how cheap it is. And the one thing that I like is that I really like to have someone with skin in the game. So typically people look for an owner operator,
Mm-hmm.
but there's a guy named Kenneth Dart who purchased 8% of the company. So I think it's around $6 billion worth. His net worth is listed at 6.6 billion. I doubt that value is correct, but let's just say this is a large portion of his net worth. So he's betting on this company, and he's got a long history of getting paid. So this guy in the early 2000s went in and bought these distressed Argentinian bonds, and he basically like made them do austerity. He seized ships, he closed off, like you know what I mean? He went the whole 9 yards just to make sure he got paid. So I have confidence that this guy's not going to lose money.
Would you say that's the best manager out of all your holdings?
The best manager? No, I think the management at British American Tobacco is shit. I think that this guy being there is going to, so I think that British American Tobacco is a good company that with the right management or right direction could be incredible because it trades so cheap and it's actually got pretty good growth. But it's just like, it needs someone to kind of be like a catalyst for change kind of. And I think that's what this dark guy will bring.
Do you see a lot of, like, where do you see the return coming from? Like, do you see it coming from like a re-rating of the multiple, mostly dividends, buybacks? Where do you see the return mostly coming from this?
So excluding multiple expansion, it trades at a free cash flow yield. I'm talking about to market cap of probably 12%, maybe 10, 12%. Oh. Then historically, over the past 30 years, because it's been incredible, like it's been very, very predictable. It's been around 5% per year. So 10, 12 plus 5 gets you around 15 to 17 before any multiple expansion. So it's pretty low risk, no brainer in my eyes.
Yeah, no, like yeah.
What, I mean, I don't think, I know me personally, I kind of have like some idea of what I want for a return per year. Do you have like an actual number that you want to get per year, or are you just like happy as long as you just overperform or outperform?
I try and aim for something close to 15 to 20, probably like somewhere between like 17 and 20. And I think that you don't need to do a whole lot of gymnastics to get there with British American Tobacco or a lot of the other tobacco companies, just because you're getting an 8% yield already. And it trades so cheap that once they start buying back stock, that's going to be so accretive to earnings per share.
What's their cash position like at BTI?
I don't know off the top of my head, but they throw off an insane amount of cash. Over the next 5 years, they're going to throw off something like 40 to 42 billion pounds of free cash flow. And I think the market cap is 60 billion pounds.
Jeez. Okay. So
2/3 of the market cap
within the next 5 years.
And the thing is, the reduced risk products are growing at 40% a year. And I think this year they might actually, it might be higher than that. I think that 40% number might be low. Yeah.
Okay. No, that's
they're really, so Swedish Match was the company that sold Zyn, and they're really big in the US. But kind of funny, British American Tobacco is winning in Scandinavia. So British American Tobacco is the #1 player in Sweden, in Norway, and Denmark.
And are those big over in Scandinavia? Are they pretty heavy smokers?
They're heavy snus users, which are like chewing tobacco. So if you think about like hockey culture, right?
Yeah,
it's like the same thing.
Okay, interesting. Because I'm always interested. I've always been interested in tobacco companies because I've always thought there's something there more than what people just say, like, don't go into them or not, whatever they might think that's unethical to buy them, or they're highly just like ridden with debt and that likes. But no.
Yeah, the eye-opening thing for me was there was a guy who came up to our school, and he was a fund manager based in the Caribbean. I think he was either in the Bahamas or Barbados or the Caymans, like one of those zero tax jurisdictions. And he came up to Queens, and he basically gave a pitch on the long-term performance of industries.
Mm-hmm.
And he was going off about tobacco. And I kind of put that in the back of my mind. I didn't really think about it until last year. He gave this presentation in 2016, so bad timing. But I think in 2020, 2021, the case is a lot stronger because I think a lot of those factors haven't changed. So if you look at British American Tobacco, all of the negative returns have been from multiple compression. So you've got negative 20% a year just from multiple compression. The actual return from earnings per share plus dividends is, I think, 12% or 10%. So the actual composite return has been negative just because of the multiple compression. Same thing with Altria. Same thing with not so much with Philip Morris, but to a lesser degree, Philip Morris.
Mm-hmm. Sweet, interesting. How do you structure your portfolio? Like when you make an initial investment at cost, do you go all in? Like for me, I have a fairly concentrated portfolio, I'd say, and like I don't really have much of I'll read I'll read so much and then I'll invest an initial 5%, and then I'll read more. If I like it, then I'll double that position. Like how do you structure your portfolio?
I think that with stuff that I'm confident in, I'll just go in and bet big right away. But I think that, like what you said, like maybe betting big might be 10%, but I'll flex it up. So at one point in time, 50% of my portfolio was Facebook, and I sold that too early. But I think by December, or maybe it was January of 2019, I had made it 52% because I was a user just like you. And I realized how much of my university life revolved around Facebook. I don't use it as much now, but in university or college, I think that it's probably the infrastructure of what those, those institutions run on. And at the time, I thought it was a no-brainer. But other than that, I don't really have any particular method to the madness. I think Buffett, he always says that he would own 6 companies and the biggest would be 25. So I think I kind of use that as a guide. I don't own 6, but something like that.
What are your thoughts on a cash position?
I used to have a big cash position, but I don't think it's valuable if the Fed, I don't want to opine on this because I'm not qualified to, but I just think like there's too much drag. If you have opportunities, just take them, to be honest. So how I kind of rationalize it is British American Tobacco is trading at a lower valuation than it was during the great financial crisis. And it's probably a better business today than it was then. So that's how I rationalize. I was holding a big cash position and then I dumped it into British American Tobacco basically. So that's how I rationalize it.
That's what I'm looking to do, because right now I have like a 32% cash position, and I just haven't been. I mean, I had a fairly big idea with Alibaba this year, and it's kind of gone down in value, and so I've been buying up as it's gone down. But yeah, I'm just looking for another big bet of probably around 15%.
Yeah, I'd say like don't invest unless you feel sure about the idea. So the cash position might make you a better investor. If things starts going down, you're going to panic less because you have cash. So as a retail or as a private investor, you're not bound by the same constraints as a fund manager. You know what I mean? So just do whatever makes sense to you. Don't just do something because everyone says a cash position is bad. I just had an idea in British American Tobacco and the timing was right.
Yeah. How has that British? So when did you initially invest in BTI?
I want to say, I think so. My pinned tweet, I want to say sometime around early this year, maybe actually earlier than that. I want to say probably summer of last year. And then I added to it in October. I added to it again in January, and then I made it really big, or like early March, late February, when there was a kind of bigger correction, if that makes sense.
So
But
what
it's
are you
an
doing with
industry. Sorry?
So what are you doing with those big dividends that you're getting in? Are you just putting it back in?
I used the dividends to help fund my purchase of Turning Point Brands.
Okay.
But then otherwise, I'm kind of looking at, I guess I'm using those dividends. Sometimes if the price is attractive, I'm going to reinvest them into those tobacco companies. But otherwise, I might look to add other things. So one company that I sold recently was Berry, and they make industrial plastics, and they're super cheap, great business, or not great business, but it's a bad business. It's getting better. Kind of their buyer base is fragmenting because of the rise of, I guess, social media brands. So like you don't need as much capital to start a consumer products, a consumable brand anymore. And then at the same time, their supplier base, it has also fragmented because of fracking. So I think that their bargaining power, relatively speaking, has improved. And that's one company I'm looking to add back into the portfolio with those tobacco dividends. And I sold that to fund Turning Point Brands because I had really liked Turning Point Brands, and I looked at it at 18 and I never bought it, and I watched it rip all the way to 61, and it was driving me crazy. So I was just like, fuck it, I got to buy this thing. You know what I mean?
Yeah.
So I saw that the other day that must have been 2 weeks ago now that you started your own Substack. Do you want to discuss like what you'll be posting on that?
Yeah, so mainly just things that are companies, I guess, long form write-ups on companies that I find interesting. So the first one will be on Swedish Match, and then I kind of want to do one on Philip Morris after that, and then probably Turning Point Brands. And the reason why I want to do this is, number one, it's because I own these big tobacco companies. I want to, this will force me to learn more about the competition in an in-depth way. And then second, it'll also give me an opportunity for feedback. So there are a lot of smart people on FinTwit. And I got a lot of feedback from that first pod that I did, which I think was really helpful. I have to cut down my use of the word like, but it is very hard. I need to work on that also.
I have a problem too.
Even after 27 episodes on this, I have it also. So
yeah, but it's something that I need to fix. No, it is hard. It's a very Gen Z thing. It's a very our age thing. So you know how you ever hear hockey players when they're given their intermissions, like during the periods, they're talking.
Coach's corner, they got the towel around and they're like,
yeah. It's like, so, and we got to get pucks deep. We got to keep below the keep it in their zone. Finish our checks. Back check, forecheck, stick check.
What was your thoughts on Tampa Bay winning the Stanley Cup last night?
To be honest, I haven't been following it at all that closely, but they got a great team. They got a deep team.
Yeah.
And Yzerman is a genius. Is he still there, or did he leave?
I believe
I think he left, right?
Oh, did he?
Oh, okay. I'm unsure whether he went back to Detroit or not.
Do you know Jake?
Was this sorry?
Steve Yzerman. Is he still at Tampa Bay?
I don't know. I've been really following hockey lately. Kind of ever since COVID, I kind of.
Yeah, same. I can't watch it without the fans.
And even now, I just find it kind of like I don't really have enough time in a day to watch hockey and research some companies and stuff.
Yeah, agreed.
No,
you found a more productive outlet monetarily.
Yes.
No, exactly.
Yeah.
There's no time.
I much rather watch an hour and a half long interview with Monish Pabrai than watch the Leafs game, I guess.
Yeah.
Definitely.
No. It's been great talking to you, Sinstockpapi. I'm sure we'll have you on again if we're able to, and I'm sure we'll be in contact. Is there anything else that you want to add? Any shout outs?
No, just thanks a ton for having me on. I guess shout out to your new Substack, which came out today.
Oh,
So
thank you, man.
go subscribe to his Substack. But yeah, other than that, maybe Greenwald and Rita. So Durable Investments, his ticker's Rita Ox, RETAOX. They're some of my good friends on Twitter, and they encouraged me to do a podcast. I'd say Philip Martinelli, his ticker is Wealth or Die. He was big into getting me into Zyn. So Swedish Match, it's his largest position, 20%. I think he's a smart guy. He got me into that. But other than that, not really. Just thank you to you guys for having me on and letting me do this.
Yeah, thanks for coming on.
So if you guys want to listen or watch, if you guys want to read up anything more about Sinstockpapi, it's at Sinstockpapi on Twitter, correct?
Yeah.
And then you have your own Substack, so make sure you guys go and subscribe to that. And thanks for coming on again, and we'll be in contact, man.
For sure. And I'll send you those letters too.
Yeah, for sure. Awesome. All right. Have a good night, man.
Ciao.
Yeah. Thank you for listening to this episode of Money Under the Mattress. If you have any questions about this episode, you can email us at moneyunderthemattress.podcast@gmail.com. Everything discussed in this podcast is our opinion and should not be used as investment advice. This podcast is for your entertainment and education purposes only, and we hope that you enjoyed it.